No fixed risk to reward, as you can see, 1.87, targeted just over 1,000 pips profit. I think this is a good example and a sort of good way to show how you can play both sides of the market. That was a perfect opportunity to look to execute on gold buys. Hello everyone, how are we doing? First video back for a couple of weeks. Obviously there was no upload, no video last week. Not a lot to really show last week, and I'm not just gonna make a video and record myself putting together 100-page documents to upload on YouTube, right? No one's ever gonna want to watch that. As I say, last week was a very sort of admin heavy week, getting all the documents together that are required for one of the investments that we are looking to do and on board with. I think altogether it's probably over 100 pages worth of documents that we had to get done last week. So unless you guys wanted to watch me type for hours a day and put all these documents together, probably wouldn't have been too much of an exciting video. Similar this week as well, to be fair. Yeah, not too much different this week. However, I thought this week, let's go through the charts, right? Obviously, I think I've spoke about and touched on the strategy that we use and the systems that we operate in my first couple of videos. However, I've never actually shown any demonstrations. I've never shown sort of any live examples of what we look for in the markets, when we look to position ourselves, how we position ourselves, what risk we use, what targets we use, what stop losses we use. Do you know what I mean? Like the whole trading system. I think I mentioned before as well, the strategy that we use for investor capital is very a higher time frame based. So we average 2 to 4 trades positions per month. I'm sure some of you guys probably average that in an hour, but yeah, for us it's higher time frame based, and like I say, it's averaging 2 to 4 trades positions per month. So yeah, I'm gonna go through on the charts. If I can, I'll figure out how to do that. Go through the charts, record it for you guys, and show some live examples. I'll show the broker statements as well of positions getting filled, profits, stops, everything involved in the positions, right? So I'm not just going over the charts and mapping stuff out. I'll show you proof of the orders getting filled, getting executed, hitting profits, hitting stop loss, whatever the trade ends up being. So yeah, I think that is the plan for this video. Like I say, no course to sell you at the end of the video. I'm not gonna say I've got a course on sale or an offer for a few £100 that you can go and buy and learn the secret sauce, secret strategy, right? That unfortunately does not exist. Yeah, some of you guys might take some value from it. Some of you guys might completely disregard it, and it might not fit in with your style, what you believe in, what your system sort of includes. However, I believe there's some key points in there that you can take away, whether it's in regards to risk to reward, the fundamental side, the technical side, positioning, pairs, how to manage positions, whatever, like I say, whatever it might be. So yeah, let's do that. And apart from that, not too much else to touch on. Of course, I think we mentioned we've got some investments going on at the moment with Clayman, with the investment fund, and externally, they're still coming together, taking a little bit longer than hoped. But as the case with all these things, right? Nothing ever goes as planned, unfortunately. But yeah, let's go through that. And let me know in the comments as well if you guys took some value from it, if you learned anything, or if it was just complete crap and you didn't learn anything from it, right? But yeah, it would be good to know what you guys think. And let me know as well if there's anything else that you want me to touch on and anything else that you want me to go over in future videos. Have a great weekend, everyone, and I will catch you next week. Okay, so first example. Now I think I'll go through a couple of examples, maybe a couple of winning positions, a couple of losing positions, and sort of do one each based off different time frames as well. Because like I say, we do only average 2 to 4 positions a month. It's very rare that we will enter positions based off the smaller time frame. Smaller time frame as in the 1 hour. I'd say over the course of a year, we maybe average 4 or 5 positions off the 1 hour time frame at a maximum. Can be some years just 1 or 2. Obviously, it depends on the market and what the market is presenting. So, first example, based off the smaller time frame, but I think this is a good example and a sort of good way to show how you can play both sides of the market, right? So, from a fundamental perspective, gold is bullish, right? For a number of reasons. This position was taken at the beginning of July. So, at the beginning of July, there was a lot of bearish dollar news. Dollar was falling quite rapidly, to be honest. And yeah, just from an economic standpoint and a fundamental point of view, gold was bullish, right? People are pulling their money out of the dollar and putting their money into housing, commodities, stocks, bonds, etc. Right? They're trying to diversify, and it was essentially a risk-on environment. So we understood that. Obviously, gold was absolutely bullish. However, it's important to understand that for these bullish movements to play out, liquidity, orders, whatever, I know there's a lot of sort of retail ideas on how liquidity is formed and what liquidity is, which is completely understandable. Everyone has their own idea. But for this bullish move here to have happened, you can see the whole way up, there's pullbacks, right? There's wicks, there's heavy bearish candles involved in this bullish move. So that was our idea, and that is what we were playing at the beginning of July. So as you can see, we had a heavy area of resistance here, not so much here, but the last couple of times we have used this area quite nicely and quite heavily to get some sort of reaction. As you can see, on the 5th of July, we did get that initial rejection. We then closed above this area before closing back below. Like I say, we weren't interested in playing the long position from this area. We were interested in the pullback for us to then continue the bullish momentum. So that is sort of all that there is to it, of course. Of course, we have a few technical sort of bits and pieces that we also look for. I don't want to touch too much on that because obviously we are managing investor capital, so I don't want to just give the whole strategy and the whole system away. But as you can see, negative risk to reward position. And I'll also include a screenshot of the position and the orders getting filled with the broker. So I'll do that as well so you guys can see proof of the position. So yeah, had this initial break above, closed back below, waited for a bit of confirmation, and then, of course, as you can see, got triggered into our positions, and on a news candle, ended up hitting our tick. Okay, so As I sort of just shown on the gold positions, here is an example of the exact same thought process, but where the position just doesn't quite execute and doesn't play out in the same way that the gold position did. As you can see, we were right and we were correct with our direction and our bias. However, timing, volatility, movement in the market sometimes, well, of course, doesn't always go and play out in your favor, right? But unfortunately, you cannot account and you cannot be right every single trade. So, exact same thought process on gold. This was also in July, sort of in the middle weeks of July. Exact same thought process. Dollar heavily bearish, euro dollar in an uptrend, as you can see, right? And as we mentioned on the gold positions, for this uptrend to continue and for this uptrend to play out, you're going to have pullbacks. Liquidity is going to come into play and going to be a factor for this bullish movement to plan out. So as you can see on the daily time frame, we were correct in our thought process, we were right in our understanding. However, our timing and execution was just slightly out. Now, we do have, of course, certain rules and stipulations in play where our stops go, where our profit targets go. But like I say, unfortunately, we are not always going to be correct. But you can see the exact same thought process, the exact same position as the gold position, which I just showed you guys, played out the exact same on euro dollar. It was just about a week later, I think. Gold was at the beginning of July and euro dollar was in the middle of July. As you can see, targeting just over a 2-to-1 for this position. And again, I'll post a screenshot of the order getting filled, and of course, on this occasion, the stop loss getting hit. Now, the next position on gold, as you can see as well from the right hand side, we only focus on 4 pairs. That's just what I've built my edge around. That is just what the data has provided to currently be the best pairs and most optimal pairs for the system and the strategy that we run. So as you can see on this gold trade, this one was based off of the higher time frame, right? First things first, you can see, as I've just highlighted, this consolidation box. Now, a lot of people don't want to trade inside consolidation, range in markets. Of course, the sort of consensus and the idea is to trade once you break out of this range, or whether to the upside or the downside. However, for us, consolidation can be a good thing and a beneficial thing sometimes to the way we position ourselves. And the reason why that is because of the amount of orders and the amount of volume going in to this area, right? So within this area, we were stuck in this range since the beginning of April up until the end of July. So do you mean that's 3 months of being stuck in one range? As you can see, when we broke out eventually around this area, you're going to get some sort of retracement. So a lot of people trade the breakout area. So this candle closed bullish. A lot of people would have looked to take buys off of this area, right? As I say, on the previous positions, when you're looking to play a bullish trend or a bearish trend, you're always going to have these minor pullbacks, which is obviously the positions which I've shown on the last 2 examples that I gave, right? So within this area, you've got an enormous amount of volume, which, as you can see, when you retrace back, you bounce off of these key volume areas. Now, we don't necessarily use volume as an indicator as such on here, but I just wanted to give this as an example. The amount of volume in this range, when you come back down to these key significant areas, chances are you're going to get some sort of reaction. However, like I say, from a fundamental standpoint, gold was extremely bullish, right? A lot of people piling their money into alternative investments. As you can see, throughout the year and the end of 2023, extremely bullish until we entered this area of consolidation. For us, that was a perfect opportunity to look to execute on gold buys. Like I say, from a higher time frame standpoint, we got executed on the position towards the end of June, and we closed out on the position sort of middle of July. So again, we weren't in this position for too long. It was about, I think it works out, yeah, just about 3 weeks. A GJ position that we've just literally closed out on yesterday, we were holding for over 2 months, right? The longest position I've ever held was about 7, 8 months. So it all depends on market conditions, right? Now it's easy to look at this and sort of say, why didn't you keep holding, right? That could have been a massive position if you just kept holding. Now, like I say, we're managing investor capital, right? So once we've hit our target was there for a reason. We understood that once you break this range, you're going to get some sort of a pullback. How far that pullback was going to be, of course, we cannot predict, right? So we were happy with our profits. We made our money. And overall, very minimal to no drawdown, really. It was just a very lovely executed position. No fixed risk to reward. As you can see, 1.87 targeted just over 1,000 pips profit, which on gold is a decent amount. Yeah, like I say, a mixture again of key fundamental analysis, understanding what the economy is doing in the US, in Japan, in the Eurozone, and of course in the UK as well. Getting that sort of base understanding and what is happening, what the big players, what the big boys are sort of doing with their money, and then using the technical side of trading to execute and find those entry points of where, of course, you want to look to get executed. So, like I say, in this area of consolidation, we anticipated a strong bullish move at some point. Now, this area of consolidation could have continued, right? We could have been stuck in this position for a few months before we eventually got that upside movement. And like with the euro loss that I shown, a lot of it is down to timing, right? This time we got our timing spot on the euro position. Our timing was just slightly off. Now, this might be completely different to what you guys are used to seeing online and on social media, YouTube, Instagram, TikTok. This was the position that I mentioned in the last clip, the longest position that I have ever held, right? On pound dollar. We got into this, as you can see, during the middle of November 2023 towards the end of November 2023, and the position actually closed off on the 17th of July. So that is I think that works out about 8 months. We were holding this trade. Now, of course, a lot of things change in 8 months, right? A lot of economic standpoints, a lot of fundamental news, positioning, wars, you name it, right? Loads of things happen within this time frame. So as I mentioned, we got executed on the 20th of November 2023, and immediately sort of started moving into profits, right? So Now, a lot of people could say, look, Jay, you were floating in some nice profits, barely any drawdown, movement was good, timing was right. You got the movement and the price and your prediction on the right side. Um, Now, that while that is correct, of course, as I've mentioned in previous sort of clips of examples, dollar was heavily bearish, and the pound was sort of building some momentum from what I can remember from that time period. I don't think the pound was particularly bullish whatsoever, but it was a lot stronger than the dollar was. And as we sort of moved into immediate profits on this position, I sort of knew and believed that I had a really good entry point and a good level of execution on this position. So I was happy to let the positions run. I was happy to let them play out. As you can see, we were sort of targeting the high set out in July 2023. So yeah, I think if this move hadn't happened first, if we'd experienced some drawdown and then moved into some profits, maybe I would have looked to have managed the position slightly differently. However, like I say, as we moved into immediate profits, I was quite happy with the positioning and where we got executed on this order. Now, going break even. For me, I don't believe in going break even. I've never done it. Well, I say I've never done it. I don't, 99% of the time, I do not go break even. I believe in letting the position play out. Of course, you can manage the position accordingly. That's why I say sort of 99% of the time, I don't look to do it. Sometimes I might close out positions before they hit stops. Sometimes I might close out positions before they hit TP. That all depends on different factors, right? How price is moving, where liquidity is sitting on in the markets, and of course the economic standpoint of that particular currency pair and that sort of global macro sort of point of view. So yeah, why when you came up to a 1.5 to 1 did you not look to go break even? As I say, I was confident in the positions, although we did experience a couple of months of, well, I say a couple of months, it was a month really, right? It was 1 month of bearish behavior, which I'm used to. Like I say, we hold positions for months at a time. Sometimes I'm experienced and have experienced these sort of pullback periods, obviously in the 7 years that I've been in the markets. So like I say, don't really believe in going break even. Doesn't really make much sense in my head, unless there's a clear sort of level and a clear sort of piece of data that gets released that I need to take advantage of and manage accordingly. But yeah, as you can see, we did experience this pullback period, but play resumed as normal and as expected. And a couple of months later, we ended up hitting our target price and our take profit. So, like I say, I think the first two positions we shown, we were in them for a couple of days. The last position that I gave an example of, we were in for, I think it was 2 to 3 weeks. And then this position, we were in for about 8 months. So there's no real time scale on how long I hold positions for whatsoever, really. It all just depends on market conditions and how, of course, the economy and price action and liquidity is developing. So yeah, not sure if these are going to be much help. It's the first time, of course, I've ever sort of showcased a few examples of the positions that we take. Yeah, hopefully you guys gain some knowledge and gain some value from this. Let me know in the comments what you think, if you agree with the style that we have. If you don't agree, I mean, either way, it makes money. We've been managing investor capital for over 2 years now. I'm seeing some really good success, which is of course why we're expanding the Clayman Investment Fund. So yeah, but of course, always good to hear different people's opinions. And if you've got any questions as well, feel free to ask. Let me know in the comments, and I will be more than happy to get back to you guys and try and help out wherever I can. And whilst we're at it as well, I thought I would show the pound yen positions that we have just closed off. As you can see, very, very similar to the pound dollar position that I just gave an example of. Similar entries, similar stops, based off candle structures, based off market structure, based off fundamental data and analysis. And as you can see, of course, over a smaller time frame, we're in this position for middle of August until the end of October, so just over 2 months, about 10-11 weeks we were in this position for, so a shorter time frame than the pound dollar position. But as you can see, immediate movement into profit, into our direction, heavy pullback, continuation. Initial movement into profit, into our direction, heavy pullback, continuation, right? And because, of course, we've been through that experience with the pound dollar and positions in the past, this pullback, there's no, do you know what I mean? It's not looking to close off the position. Our price is now moving against us. Let's just get out. We're coming close to stops. Let's just close the position. No, trust your initial analysis, trust your initial perspective and why you had those stop orders in place, those entries in place, and that target level in place. Just remember why you had those levels in place. Target was here for a similar, as I say, this just closed off yesterday, on the 23rd of October. But you drop it down to the smaller time frames at this area. As I mentioned in one of the previous examples, large level of consolidation here, right? You enter a consolidation period for quite a significant period of time, where a lot of volume, a lot of orders have accumulated and gathered together. And then if you sort of drop it down to the smaller time frames, like I said, we use volume analysis, but not with indicators, not with charts. Sorry, not with a volume profile. But you can see key area of volume during this consolidation period. We didn't react exactly off it, but we weren't far off, right? We sort of anticipated there to be a slight reaction at this level. So yeah, that was the reasoning for our entries, for our take profit level, and of course our stop level was placed at what we thought was a pretty safe point if we were to experience a heavy pullback, which, as you can see, for this example, it clearly was. So yeah, guys, that is it for the example trades and example positions that, of course, I just went over. Hopefully I didn't waffle on too much. Hopefully you guys gained a bit of knowledge and a bit of an idea of how we trade and what we look for. Like I say, any questions, anything that you guys want me to go over again, if you want me to show any more examples, any questions that you have on the examples that I have shown, feel free to let me know. Ask any questions and I'll be happy to get back to you and yeah, go over that. Happy to. I don't use Instagram or social media or anything, but I might set one up. So at the moment, ask in the YouTube comments, but maybe in the next couple of weeks I'll look to set up a an Instagram account to go over, and you guys can sort of message me privately. Yeah, that is going to be it for this week's video. Next week I am going away for a couple of days, and the week after I'm away for a couple of days as well. So I'll try and sort of film and show where we're staying, what we're doing, the reasoning behind going away. Like I say, managing investor capital, managing your own capital and your own money is a high stress, high pressure environment, right? So it's important to take a break sometimes, reset, refresh, and get ready to go again for the end of the year. So yeah, Appreciate you guys watching the video. Hopefully you enjoyed it, and I will see you guys next week.
Look, can I get up next to you? Up in the middle of the night texting you. Sky's looking clear for the night set for two. Gotta